the world is going to wake up. I think they're in the process of waking up. I think our reputation around the world has been shattered. I mean, it's not, it's not the banks around the world that are going under. It's our banks. It's not the automobile companies in Asia or Europe that are going bankrupt. It's our companies. It's our country that's at the epicenter of this problem, and the problem revolves around the fact that we can't pay our bills, that we're flat broke. And it makes no sense to lend money to somebody who's broke just so they can spend it and now be even broker than when you loaned them the money in the first place.
Okay, well, that makes sense to me. So I just wanted to get your viewpoint on it because I'm finding it odd that people I know seem to think that we could just go around issuing debt we'll never pay back.
Well, I mentioned that in my book, whom the gods would destroy, they first make mad. And obviously the whole nation's crazy because nobody understands anything. But we're headed for a major collapse, and then after the fact, people will finally understand that. Unfortunately, 99% of us are going to be completely broke. Mm-hmm. When they find out. And hopefully, we've got as many people at Euro Pacific Capital as we can because my clients won't be broke.
Yeah, well, I'm going into your New York office on Monday to meet with one of your managers there. And I own a lot of gold. I own commodities. I own some foreign currencies. The one thing I don't own is dividend-paying foreign stocks. Yeah,
well, it's a great time to buy those. But, the only thing I can say is, it's a great time, but it's probably going to be even better the day after you buy. But don't worry about it.
Okay.
We're buying stuff cheap, and it's probably going to get cheaper, but it doesn't mean we shouldn't buy it, because if we wait for the bottom, we'll probably miss it, and then we'll end up paying a lot more. Anyway, thanks a lot for the call.
Thank you.
Look forward to your business. Let's skip to John in Florida.
Hi, Peter. Thank you for taking my call. My wife and I, we're Canadian. We're living in Florida at the present time in the winter. We're retired in our 70s, and we're living a good life for the last 10 years retired. We're just wondering what's going to happen. We lost something like $700,000 in the last few months, and we're just wondering. The experts are saying 3 to 4 years before a recovery. Does that mean our money?
No, I don't think we're going to recover in 3 to 4 years. The economy is going to be in worse shape in 3 to 4 years. You're retired now. I mean, where did you retire from?
We retired in Canada.
So do you have a pension in Canadian dollars?
Yes.
Well, I think you're okay, especially living in Florida. I think things are going to get a lot better for you. You're going to find things very, very cheap down there if you're paying for them with Canadian dollars. You said you're down about $700,000. Where are you investing with us or for another firm?
We're fully invested in Canada. We don't have any U.S. stocks, a little bit.
Well, let me ask you a question. Do you have any stocks in Hong Kong or Singapore or Australia or, Scandinavia?
No.
Yeah, I mean, I don't think you should have all of your money in Canadian stocks. I think you should have some money in Canadian stocks. So I think you might want to diversify. You might want to take advantage of the fact that stocks have gone down every place, not just Canada. And we can certainly take a look at your account. Since you live in Florida as well, we can work with you, and we might be able to give you a little bit more diversity. But I think that in general, since you're all Canadian right now, you're in much better shape than a lot of people who are listening to this who are in U.S.
Okay.
But I think you should diversify. I think there's a lot of opportunities, particularly in the Asian markets, that you should try to take advantage of.
Well, we have a lot of stocks, commodities in Canada. Mm-hmm. We have trust units, but as you know, the trust units in 2011 are going to be dropped.
Well, I know they're going to raise the taxes on them, but it's my feeling that the stock prices won't drop much because I think that's already factored into the current market.
Okay. And our dollar, of course, from what you're saying previously, because the U.S. dollar will drop tremendously in the future.
Yes, the Canadian dollar should rise rather substantially against the U.S. dollar. I mean, it did rise to about $1.10 at the highs last year. It's back down to being about 80 cents, but I think it's going a lot higher once this noise is over. Once this repatriation and this deleveraging is over, the dollar, I think, is just going to drop like a stone. That is the real crisis that's coming. It's the currency crisis. It's out there. It's the gorilla in the living room that nobody can seem to notice, and that crisis is far greater than the one that everybody is trying to solve with the printing press.
Okay. I hear you talk a lot about gold, and we're just wondering if we should sell some of our funds that we have that are not producing much for gold.
Yeah, it depends on what your needs are. I mean, you're not going to get a lot of dividend yield out of gold, or you're not going to get any. You can buy some of the mining stocks, but again, there's not a lot of yield there. So it depends. I mean, now, there's some of the base metal companies around the world that have huge dividend yields, but if you don't own any gold, it certainly makes sense to own some.
Yeah, we have some Kinross.
Yeah, that's a gold stock. Yeah. Yeah, well, anyways, as I said, call up and talk to one of the brokers. We got an office down in Florida. I don't know how close you are to Palm Beach.
Oh, in Palm Beach? Okay. We'll look you up.
Yeah.
Thank you very much for taking my call.
Okay, thanks for the call, John. Next call is James from Texas.
Hi, Peter. I have a question regarding your investment thesis. In order for decoupling to occur, isn't it necessary for foreign central bankers to take action enabling it to occur? And if so, why do you expect them to do so, given that central bankers do stupid things all the time?
Well, what I think would require is for all the central banks around the world to stop artificially supporting the dollar and to allow their own currencies to rise. That would cause the purchasing power to transfer from America to their own citizens, and that would give them the purchasing power to consume their own production. At some point, foreign central banks are going to do that. If they don't, they're going to destroy all the currencies on the planet, and gold will be, trillions. So I think they're going to come to their senses, and they are going to pursue their own interests rather than the interest of Americans.
Okay, so what finally forces their hand in making the right decision that they...
Just reality. At some point you stare into the abyss and you realize, that you don't want to go in there. Thinking of the prospect of having to fund the Obama administration's New Deal, the tens of trillions of dollars that they're going to have to basically give us, and what that's going to do to their own economies, I think the world's going to say, you know what? No, we're out. Count us out. We're not going to buy these bonds anymore. We're going to take the losses we have because we're not going to pile on more. At some point, you make a decision not to throw good money after bad. You can realize that you've made a mistake, and you know what? The cost of propping up the U.S. economy going forward is far greater than the cost of letting it collapse. And they will do it.
And they're feeling that cost. Does that come in the form of runaway inflation in their own economy?
Yes, ultimately they're going to destroy their own economies. Yes, they're going to kill their own currencies. They're going to have to create massive inflation in order to buy up all these bonds. And why? And so the more they do that, so we keep shutting down our factories. We shut down more and more factories. More and more U.S. companies go out of business, which means we produce even less, which means our trade deficit gets bigger and bigger and bigger. In the final analysis, if they take this to the nth degree, right, there won't be a single American who makes anything, right? Well, we'll be 350 million people living off of the rest of the world. And the rest of the world will work all day long in factories for poverty wages and ship all their stuff to us. And that can't be. This is not, the French kingdom. We're not the royalty at Versailles. We can't force the world to live in poverty so that we can live in luxury. It's not going to work. So it's going to end, and it's going to end soon, and it should be obvious that this is falling apart.
Okay, thanks, Peter.
Thank you. The next call is Douglas from Michigan.
Hey, Peter.
Hey, how's it going?
Hey, very good. It's an honor to talk to you first, and I'm young, new to the working world. I only have a small savings. I recently put about 20% of it in physical gold, and I'm very worried about inflation and what I have saved kind of evaporating over the next few years. What else do you suggest? Do I buy stock? I only have about $5,000 that I could put in the stock. Do you suggest?
Yeah, it's not a lot of money for stocks. I mean, you might want to just buy some gold or silver. With a small amount of money, it's just good to do something like that. Buy some junk silver coins, you can't really build that big a diversified portfolio with $5,000. Also, I've talked about and I've written about the idea of stocking up on things depending on where you live. Maybe spending $500 or $1,000 on stuff you're going to need that's going to get more expensive. Not big ticket items, but toiletries, shaving cream, razor blades, batteries, things like that. That's going to get more expensive. Certain food items that are non-perishable that you can hang on to. I mean, you might as well buy this stuff now. It's just going to get more expensive.